I'm talking chart patterns with Tony Turner. Hi, Tony.
Hi, Karen.
Chart patterns, why are they important and how do we recognize them?
Well, you know, recognizing chart patterns does take a while of looking at charts and just staring at it. First of all, you say, I'm looking for head and shoulders patterns, top reversals. I'm looking for double tops. I'm looking for double bottoms. Identify the chart pattern and then keep going through charts. Maybe it's a daily chart. Maybe it's a succession of daily charts, or maybe it's weekly charts or monthly charts or even intraday charts. But you have to keep staring at them and staring at them. Look for on each chart, is there one here, is there one here, one here, until your eyes start to recognize them. Now, many people say, well, chart patterns aren't that important. Really, what chart patterns are is they're human behavior on a screen. There's no two of them are alike, so we can't say, oh, that's exactly identically the way to what happened last. Nothing in the stock market ever happens the way it happened before.
Right.
But we can get the basic characteristics locked in our head and then know psychologically what the patterns tell us so that we can evaluate them and use them to make decisions. Like at one point we were talking about a double top, and the psychology behind that is really pretty simple when you think about it. If price comes up and if price comes up and makes a high and then retraces or comes back down, now it's the buyer's job to come up and buy the stock price, we'll say, at a price higher than the high before. Are they willing to do this? And when price comes up, meets the prior high, if people are willing to pay for more for the stock at that time, then we'll say the uptrend continues. But if they say no way, they put their hands behind their backs and say, we're not paying more for this stock right now, then that tells us as traders and maybe investors that price is not going higher right now. And perhaps it's time to raise our stops or even take our profits. So that pattern, the double top pattern, is very powerful. And I've seen it turn markets around in a big, big way and send them south. Conversely, double bottoms will send a market much, much higher. So they're very powerful patterns that can tell us a lot and certainly help us when it comes to trading and even investing.
How about the head and shoulders pattern with the neckline?
Gotta have that neckline.
Yeah, gotta.
Head and shoulders is a funny pattern because so many people think, and it is, that it's a top reversal pattern. And it looks just like we are. It's got the stock is moving in an uptrend. It comes up and makes a new high and forms the left shoulder. Comes back down to a support area, pulls back, then moves up and makes a much bigger high. This is all the Johnny-come-latelys who go, wow,
missed it. I need to get in.
Missed it. Need to get in. And I know the stock moved up forever and ever, pulled back. This is my big chance. So I got in and everybody else in the market got in and took the stock way up, and you make a big head that way. Then price comes back down to that original support that we made with the first shoulder. Then the big people, we say the smart money said, I know what this is. I see it coming. So they start selling short. Other people take profits. It comes back down to this line we're starting to draw, horizontal line. It's not always horizontal, but usually something like that. Now we make the right shoulder. Now the late show people come in. And they say, okay, now I'm going to buy the stock here because it pulled back and it held there. They make the right shoulder. Notably, though, the volume is less on the right shoulder.
So
as people are saying, no, this isn't as good as it looks. Now, when price crosses down below that neckline, that is many people's signal to sell. One thing that people have to know to look at is prior price action. Is it shallow going up? Or is it steep going up, and how long has it been going up? Because to add to the fun of all this, a head and shoulders can simply be a continuation pattern that actually then, when the neckline is maybe penetrated for a few days, price can come right back up. And I saw that happen last year in 2010 on the S&P, come right back up and shoot much higher. So we cannot assume it's a top reversal pattern. we have to be very careful with our trades in this.
And very diligent.
And very diligent.
Toni, thank you.
You're welcome, Karen.
Toni Turn has been my guest. You're watching the MoneyShow.com video network.